The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good. Our guest today will be J.D. Parrots. He'll be coming in at the half hour. He's always good to listen to from All-Star Charts. Folks, if you could buy stock in him, I would buy it. This kid is a comer. He's only, I think he's 30 or something. You know, hell, we got a cat that's 30. Here, Fluffy, come over here. Anyway, listen, pay attention to him because he's going to be very, very interesting. We're looking at the chart of the FTSE here. As you can see, you know, it's had a pretty good rally, a big move up to the 78% level. And they're telling me the chart is not showing, so give me 1 second and we will rectify that situation the best we can, and I think we should do it just about now, and that should be it. I think we'll be able to see it. Is a little car. Wow, I don't know what that means. Anyway, that's the chart of the FTSE. I hope we can see that up here. Let me know, Al, if it's showing or not, because you know I'm trying to point out these these huge moves that we're having. So I hope it comes through. Let's give me a 10-4 on that. So far it's not showing, but let's try another one. Let's get up here. And okay, we are seeing that. So that's what the FTSE looks like. What we'll look at now is we'll look at the German DAX. This is a little quieter, similar type pattern, but that's what pattern recognition is all about. You got to find the one that fits your methodology, and then you go from there. And here is the FTSE. What's important, folks, that all these are in downsloping times, and that's why it's very important. Well, I'm going to repeat this next thing over the next couple of days to see if it happens, because if it does, then we'll have a pretty good idea of what's going to be happening into the middle of May, or middle to the end of May. That's this pattern right here, folks, that we've been following. This is the one from 1987. This was we've been talking about for quite some time, but the reason why I'm doing it, folks, what was his name? I think Henry Ford said, repetition is the mother of knowledge. So let's let our mother tell us what to do here. Here was the top in the market in 1987. That was on August 25th. We came down into the solar eclipse on the 23rd. 9 days later, we crested on October the 2nd at a Venus-Uranus aspect. And this is what we have. We had the solar eclipse here on the 29th. You add those days to it. It's going to be out to around the 5th. So today's the 4th. So today or tomorrow, we'll be looking for a market that's heading lower. The key to this is if we get down to these key levels and close there, I mean, not making new lows, but close there on a Friday, I would recommend buying some puts on that day, because if it doesn't open down sharply on Monday, you just get out of the puts and, stand aside. But that's what this looks like. I mean, it's acting. What have we had here, folks? We've had this little tiny 3-day rally. My goodness, the best the S&P can do is rally 150 points in 3 days. This is actually, that's not a very good action from looking at this. So let's keep in mind, what we're watching here as we're looking at some of these things here today. Now I'm going to. One of the things that I really like to do is I really like to trade short term, especially when volatility is the way that it is. See, when I first started trading, folks, corn moved 3 cents a week. I mean, that's 3 or 4 to 5 cents a week. It was trading at $1.25. Now it's trading at 8.25, for heaven's sake. So we're having tremendous volatility, and that's what pattern recognition is all about. It helps spot some of that stuff. So let's keep in mind. Now I want to walk through with a couple of them here that look very interesting. First of all, let's take a look at this soybeans that we were talking about yesterday, and get this chart up here. I keep remembering keep that little guy on the bottom to get him up here to get the chart in here. There we go. Okay, now that's the soybean chart. We have this big move down. Okay, now those of you that were watching this, if you would have noticed this from high to the low, we had a perfect 382 retracement here, and then down really sharply. And this has dropped a lot, folks. And we've got a question about Stan Harley. Stan is traveling right now. I spoke with him last night. He'll be on his way back, and he'll be our guest on Monday. I've got him listed for Monday. That's not true. Monday will be Norm Winsky. Tuesday will be Stan Harley. We'll have Stan on the line on Tuesday. So are you there, Dave?
Yes, I am.
Okay, did that answer your question?
Yes, it did. Can I ask you another question?
I don't know. There's a line of people. Well, let's see. We've got 26 callers waiting, but just take your time. We'll make them wait. Go ahead, Dave.
I was going to ask you, where do you see gold going here today?
Well, I'm very bearish gold. We added to the position. That was our second position. We sold the first one at 925. We sold the second one at 877, and now we have our stop at 877 on both positions. It's actually holding up okay, but I still think we're heading lower. I'd like to see, I know it seems like a stretch from here, but at 1812 to 1776, that's where I'd like to be a buyer of gold long term, because silver's acting badly, and so are some of the others. But that's what I'd like to see, is a big washout in that gold market below 1800, and then I will be looking for a very serious buy.
Okay, thank you very much, Larry.
Hey, Dave, thanks for calling. I appreciate it, pal.
Yeah,
you bet.
Thank you.
Okay. All right, let's move on here. The other 26 callers have hung up, so let's move on to the next one. And that was, we were talking about this soybean oil, where we are here, and I wanted to, oh dear, now this is where the hard part comes in. Where did I do it here? Oh, here it is. Let's get it up here. There's what I wanted to see. This is what I wanted to see. This is where you reduce your risk, folks. This is roughly a advertisement for the program that we're going to have on the 17th. Here's that big high we were talking about. You see, there was nothing in here until we got to this level, and this level down here, folks, it hit it twice. It hit it once here and once here, and added to the position. And today I got out of it, and now I'm waiting for the ABCD to form. But when you're watching these on the shorter term time frame, and you got your eye on that 382. Boy, oh boy. I mean, let me tell you, it's been quite a while here for the last 18 months or so that I've been watching this, but, it's just amazing. And I know some of these things jump around a lot, but, when you're trading something like the crude oil, let's get crude oil up here just to show you here. This is the last few days. I mean, this is not anything that's, historic or anything, but look at this. Look at these moves that you have here, folks. I mean, these are thousands of dollars. That's $3,000. That's a lot, and that completes the ABCD down here. And now we've rallied. We're already above this level right here, folks. And so that's why this is really a powerful tool for intraday trading. I'm going to be talking about that, giving you lots of examples, and using it live on the 17th of May. So I think you'll enjoy it. Hey, let's take a break. 877-927-6648.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500-plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and we are going to do a little fun here. I posted a chart of the AI program, the neural network that we use to look at some of these cycles on a time basis. This is the E-mini S&P. As you can see here, we're just about ready to bottom here in about 12 minutes down at this level. We're right. Well, this has nothing to do with price, folks. This red line has all to do with time. The price has nothing to do with. It's around 11:30 to 11:40. We should make a bottom and then make a secondary bottom here. And this is the important one. That's about an hour and a half from now. If we're making new lows after this bottom is in right here, that's highly significant because that's telling you that this cycle is inverted and we're going to be down sharply for the rest of the week. So in about an hour and a half, it's right around 1 o'clock your time in New York or wherever you are. If you're making new lows, those last 3 hours are not going to be pretty based on what this is telling us. Now, that is just it's just a forecast, folks. It's certainly not perfect. It's right about 65% of the time. But as you can see today, it's been nearly perfect. It even caught this last little 382 rally that was here. That's leading to the A, B, C, D to the downside, right down in this area. So let's watch that because I think it's going to be interesting to see when that happens. Remember that key day that we're looking at is for tomorrow, either Cinco de Mayo, which is the Mexican independence. And since I'm 72 miles from the Mexican border, instead of having coffee, you have a nice frozen margarita. And if you believe that, I still have 2 shares of the Brooklyn Bridge available for sale. All right. Now, that's just to see what's going to happen. We're not going to worry about that right now. We want to get back to some of the other charts that we were talking about and why they're very important. I think I'd like to follow through with this one on the E-mini yesterday from the last several days here, because here again it is showing the importance of when you're trading on a shorter term time frame like 15 minutes, you're having such tremendous volatility that you can see this. You can see the beautiful butterfly 3-drive pattern that was made here at the top. You come down, you rally up to exactly the 382. You come down, you rally up to the 382, then you came down again. And when you went back above that 382 the second time, that was a move to the upside. So hold on, they're whistling for me over there at the order desk. Something is clicking, so just give me 1 second. I have to double check the other computer just to see where we are. And there it is. We're getting really close here, folks, for a pretty significant bottom. So let's pay very close attention to this E-mini S&P, because we are not far away. That was the beeper to say something is getting ready to happen. And my ready to happen number is at 41.44. So we're getting really close, within about 6 points of that. And I might change it a little bit, because we're getting close to what I think is a pretty good bottom down in here in the market. Now let's talk a couple other things. We have basically 4 positions on. We're still short stocks, and this is a short-term trade, of course. We believe we're going to go down sharply here these next few days, because this is setting up almost exactly like what we had happen in October of 1987. The difference is this market is much weaker than it was back then. Back then we had a 61% retracement, and we can't even make a 382 retracement, folks, with a 3-day rally, and that is not a fun thing to remind ourselves of that, because that means the market is incredibly weak, and it continues to be that way. Now, there's another one that we've been doing that has been acting relatively well. We'll get this up here so you can see it. This is the euro position. Believe me, it's stayed down here for so long, folks. I'm beginning to think that maybe it didn't have a chance, but right now the position's got about a $900 profit in it, and we want to see if we can, match this move that we had here. Folks, anything below these lows now, after a 5-day rally, and the rally has only gone, very, very shallow. So you'll see this rally here was really strong right after that low, but on this low right here, it's not. This is beginning to believe that's why we tighten up the stops on these, because when a major cycle low comes in like that, it should explode to the upside. I mean, we've seen it happen in many things. This one is not doing that. That doesn't mean it can't explode. Maybe it's going to wait till the Fed comes out today. So with the Fed in there today, we got our stops at our break-even point now. It has to drop about 80 pips for us to get out, but it's worth the risk, in my opinion, because A, you have no risk in this trade at all. Remember, the first thing we do in our trading is the old Warren Buffett technique, is never lose money is rule number 1, and rule number 2 is don't break rule number 1. So I'm not going to break rule number 1. I'm going to put the stop at break even, and we'll see if it works or not. And believe me, there's so much stuff going on out there with the news and everything. You never know what it's going to be. But the Fed is between the proverbial rock and the hard place. You remember these Treasury bonds, they have been going down since, oh my goodness, I can't even remember. Let's just get the last 382 up here so you can see it. Now, that's where we added our positions yesterday up at that 140. We put another one on, and let's get this up here to see it, because if you follow these 382s, when I send them out, you'll know exactly what to do, because, you sell it at your 382 retracement, you put your stop above the 50% and let it go. Now that you have a nice profit in this, you got to be able to, protect yourself. And with the Fed in there today, that's what you have to do. But remember, everybody knows interest rates are going higher. We saw Jeff Hughes' program on Monday, and he talked to us about these the traditional movements in these cycles that are so strong that it's surprised everybody. That's basically that yield curve is inverted. So a lot of big things are happening in the world, folks. So let's pay attention to it. Now, I do, when I put my trades on, I look at the hourly, and I look at the 4-hour, and when I get ready to put the trade on, I actually go down to a 15-minute and sometimes even a 5-minute to get what I think is the best possible entry. And then when I get that, I put it on, and then I go look at something else. See, one of the advantages of trading for a long period of time is your belief structure is such that you know that all the stuff that's out there is already in the market. It's already being factored into it. People are positioning themselves in front of the Fed report or what it happens to be. So that's the one that's the reason why I do the 15 minutes, because I get down to the heart of what's going to happen. Remember that when I did these videos before about Mandelbrot and how he found fractal analysis and how important it was, and he said all you had to do is to find the seed that will tell you what the fractals are going to be forever. Well, the seed, folks, is what he talked about, was none other than the ABCD pattern. It was he called it the lightning bolt, but it was the ABCD pattern, and that's what I do. ABCD. I've got a guest coming in, folks. One of the traders from London is coming over to spend a few days with me here in Tucson, and he was so excited. He was trading during the time that we were giving the trades, and he made a lot more than he paid for it. So he's coming over to see us from Pittsburgh, Pennsylvania. Hey, we'll be right back. 877-927-6648.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish a Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, folks, we have on the line, I believe, J.C. Parrots of, I guess it's no longer All-Star Charts. Are you still with them, or I understand you are? Okay.
Charts, Larry, how you doing, buddy?
I'm good. What are you showing for us today, J.C.? What do you see happening in the markets?
Well, I got to hop. I got a meeting now at 11:30, so I just wanted to say hi. Okay. You know, what am I looking at? I'm looking at the U.S. 10-year yield finally hit 3%. That had been a target for very long. the market, anything, long duration in terms of growth stocks, NASDAQ, all these long duration names have gotten slaughtered as bonds have gotten crushed. So if we get some stability in the bond market, I'm not so sure that that's a bad thing for stocks. And with sentiment so poor currently, I think that presents a favorable situation for stocks. Now, there's a lot of commotion going on today, all sorts of press releases and everything. So let's let them dance. Let's see how they work themselves out and see how they close out the week. And I think we'll have a lot of information this weekend to digest from this week. And the number one thing I think we need to focus on is how risk assets react to interest rates finally hitting 3% and how bonds react there. That's what I'm watching.
Hey, listen, I'll let you go. I know you got a meeting, and when you get a chance next week, if you get a chance, let me know. We'll have you on for maybe a 15-minute segment to show 100%. Some of your great charts.
All right. You're the man, Larry. Have a good one, guys.
You bet. Keep the faith, buddy. J.C. Parrots, folks, of All Star Charts. Okay, let's move on here. We're at the critical time in the stock market, folks, right now at 11:30. So we should be bottoming really close. Well, we came within half. And believe me, folks, this thing could not work. Oh, we got down to 44. Shut the front door and raise the rent. I wondered what that noise was. Okay, so let's take a look now. The main thing is, folks, if this thing keeps going down here over the next 15 minutes, it's going to be very, very hard for it to keep going up. So it's at the real critical level here that we're looking at. And remember, this is a program that has a high degree of accuracy, usually around 65%, but you're wrong within 15 minutes, and that's what we're looking at as we're watching some of these things unfold. So hopefully we'll learn something from it. If nothing else, hold on, I've got to refresh a chart here so that I can get it up here to share it with you. Hold on just a second here, and we'll move on to the next one. And then we'll get up here to someone asked a question is, how much do I risk on this? With this, I risk about 10 cents or $500 in the S&P because it jumps around so much that you just literally, you've got to give it that much room these days. Sometimes you can trade with less, but usually that's the case. You got to do something that is going to hold up relatively well. I wanted to get back. I had a question from the email last night about, this is about Netflix and the pattern that I was looking at here. Folks, you can see here on Netflix, we had the 3 drive to a top pattern here back in, I think it was November, right around November. Then the market sold off. And then, of course, right here, when this ABC failed and gapped down right here, boom, look at this. This is a tremendous move to the downside. I have an interesting story to tell you right here. You see that ABCD pattern that ended right here? I was training in Mang about 20 years ago when the dot-coms were going crazy, and he was on fire. He couldn't lose. I mean, he was just doing so great, and he had a big buy signal here on this right here, and it was an earnings day, and that earnings day came out, and it hit him pretty much like what happened here with Netflix. And he loaded the boat here because he'd been doing so much. He's trading, 2 and 3 contracts, and he put a 20 lot on here, and that's what it just totally devastated him just in one trade. It took him 2 years, folks, to get the mental capacity to get back to trading. He didn't give up, and he got it all back, and now he's consistent again. But he will never forget that. It was in Q charts. I remember what the name was that took over for Q charts. That's what it was. And the buyout came, and boom, bada bing, bada boom. That's what did it. So remember, it's not how much money you make, folks. It's how much money you don't risk. And that's really, really super important. So those are the main things. Well, we are filled now, and this should be it in the old in this market here for the stocks if it's going to hold. Now, whether it will or not, that no one knows that answer, but we're getting very closely. The number you want to watch, folks, is 32,920 in the Dow Jones E-mini contract. The S&P just hit 4144. Now, on that 4144, I'll put a stop at 44.37. Yeah, 8 points, and then you'll be able to take a look at that. Okay, E-Signal bottom. That's what it was. E-Signal bottom out, and but that was after the collapse. That when it collapsed, that's when E-Signal bottom. That's for sure. Q charts, yeah, they had a good chart program, I guess. I don't know whether it worked at one time or not. Now we're only 30 points away in the Dow. Pay close to that number, 32,900. That's going to be an interesting one to pay very, very close attention to. I'm looking over my shoulder here at the prices, so I can still, talk about the charts that we're talking about in the market here today. And since we were talking about the let's get it up here so we can see it. Where is that dollar index chart? Are you kidding me? Oh, I took it out. Oh, dear. I don't need it that bad anyway. Hold on just a second here. I want to get one here. This is the one that I questioned about. Yeah, hold on. This is the real problem in the metals market, folks, is this one right here. This is the silver market. And it's 2 days late, but we broke this by quite a bit. Then we rallied back to it. So until we get some semblance of strength here in the silver and gold, I still think we're heading lower. And with the Fed out there today, the chart should be showing now. Hello. I don't know if that's right or not. So give me a second here. Okay. Oh, I should tell the rest of that story about the Q charts. Well, that's not necessary. That's it. Don't need to know that. Anyway, the fact that silver has taken out that low, it's trading about right where that 786 is right now, but nothing really exciting to talk about as we go into it. The main thing from my perspective, folks, is trying to share with you anything that I think is really super important, and that's this one right here. That's the one I started the show with. I think this is, and believe me, folks, these things don't work some of the time, but boy, when they do, you got to be paying attention. So the key is we should be topping either today or tomorrow, Friday at the latest, and then starting to close lower. And if we close lower on Friday, down near these lows that we had near the solar eclipse, look out. That's wow. That's the main thing that you have to be worried about here. Yeah, by the way, we just got a heads up that 41.37 is the weekly mean. That's the price that's expected for a mean price for this week. My stop's right below that, so we'll see if that's going to work or not. But we've certainly got it on our watch list to see what's going to happen. And that's all we can do. No more than that. Okay, now let's move on here. We had another question, and that was, hold on a second, I got to get the chart up so we can answer it for everybody. And that was getting back to I want to share this about open interest. We'll be right back, 877-927-6648.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Our friend Mr. BV down there in Dallas. Billy, wanted to thank you for sending us on. This basically shows open interest and prices. The dark line, of course, is your prices. Your open interest is your lighter color. You'll notice when open interest is dropping, you see in prices are going up. That is short covering. You can see the weakness in the market that happened here. Same thing here with the S&P. New highs, open interest dropping, and then prices going lower. The open interest, folks, is a total number of buyers and sellers. In the futures market, for every buyer, there has to be a seller. When we have a call from Orange County, Mike, are you there?
Hi, Larry. How you doing this morning?
Very good, my friend. What can I help you with?
You talked about this E-mini trade for the S&P, and you put on the trade, like, let's say you got in it at 41.44. Where do you put where's your target? I mean, how long do you let this run? I mean, it's up
well,
now.
Mike, now you're asking, well, no, that's okay. That's what you have to do is when you're trading. The first thing I have to do is I want to cover my risk. Okay, so I bought it at 44. And it's moved up a little bit right now. So what I do now is I put my stop back at 44. So if it gets back below 44 again, I'm going to wait and see what happens, because it should have bottomed at 44. It rallied 6 cents or something. So to me, I made $300. Now if I lose $300 plus the 4 I was going to risk, I don't want to risk that. So I'm going to put my stop at 44, which is pretty much at the low of the day, and then I'll reevaluate it in about 15 minutes. Because if it moves fast enough, I'm not even following it now. I have no idea where it is, and don't tell me. So that's how I'm following it. So that's basically what I'm doing is I'm watching it. See, theoretically, if we get above 41.60 or 41.55, something like that, then I've got a substantial profit in it, and then I'll be able to work with it. Right now, I'm in a break-even situation, and that's what I want to do. I want to get to the break-even as quick as I can, because now I'm the casino now. See, I'm no longer a player. I'm the casino, so I don't have to risk anything, and that's what casinos do. They don't have to risk anything. Short term they do, but not long term. You follow me?
Okay. Yeah.
See, whenever I send you a chart, you look at it. Remember, I'm looking at the amount of money I have to risk, because that's real cash.
Yes, sir. All right. Thank you, Larry.
Hey, Mike, thanks for calling in, buddy. I hope to see you soon. You bet, buddy. Talk to you later.
Bye now.
Okay. You bet. Now we're to get back to Billy's chart here on the open interest, and you'll notice here a market that you can see again here, open interest starts to finally increase, but prices are dropping. That's actually telling you that there's more shorts coming in, or the shorts are in control. So that's all it's good for. Now, the way I follow open interest, whenever there's a really bonkers day like what we had yesterday and what we're having today in the natural gas, I am all over that one. I really want to know what that natural gas open interest is doing. So that's what I'm, paying attention to, because it has such volatility and it follows these numbers. Oh, you won't even believe this one when I show it to you. I did it just so that you folks could take a look at it. I was following this last night, and I wanted to. I'll just share it with you. You know how I always talk about 382, and I know there's a lot of disbelievers out there, but maybe this will help them not be so much of a disbeliever. Here's where we were last night. You'll notice we had a 2-hour run down here. We stopped exactly at the 382 of the low that we made down here at 795. We had that right there. And look what happened when it hit that number. It exploded through there like a rocket ship. And look, see, if you'd have put your buy stop just above the old high right here, it never gave you any heat. Then it backed right down to another perfect 382 retracement, and then ran another $2,000. This is what you call volatility in spades, folks, and that's why natural gas is so fun to trade. The margin on it, and the fills are fantastic. The margin on it is way less than any of the other things that we trade. The gold, crude oil, and the S&P have really heavy open interest, margin requirements, but the natural gas really doesn't. So it might soon if it gets much higher than it is now, but right now it's still hanging in there pretty good with a relatively good margin requirement. So I hope that gives you some indication of what's going on here. By the way, the high on that was a 1.27 of the old high that we had at 801. That came in at 844. And so far, that's been the main thing that we've been paying very, very close attention to here. So, all right, let's move on here and just cover one thing here. I don't know. My beeper just went off because I just made the first profit objective in that S&P trade. So let's get this up here and update it to see what's happening here. And there's, I think, was the up. No, that's not the update, was it? I don't know. Well, I'll do it at the break and I'll send it up here. But anyway, that would have been if my first profit objective had been reached. And so what I do now is, keep my stop working at break even on the remainder and see how it's going to unfold. And here is the one I did at the break. Oh, this is right after it happened. Hold on, we'll get this up here so you'll be able to see it. I hope this helps because that gives you an idea of what I'm actually doing here today, folks. I can't teach and do the same thing. See, the time was just perfect so far today. So there was the buy was right there. Once we got up, I know we got up to the 54 level because I've received the notice, the fill. So now what I do now is I put my stop back here at break even, and that's it. What I'll do, I'll follow that up into here if it's doing it, and depending upon where this is. See, this is time. It has nothing to do with price. So if we get up to this area here, whatever it is, in this area, and I've got a good place to sell for that next hour down into here, that's what I'll be watching. But there's the key level to look at, folks, right there. Because if you start changing from this level, in other words, you start going down after this time frame, that means this is going to be going down the rest of the day. So really, really important information to know if you're trading. And you can do this yourself. There's ways of figuring that out, and we'll be doing that together on May the 17th when we do some of these things so much. I'm going to be doing, my goal for this thing on May 17th is to make money. That's the number one goal. Secondary goal is I want to teach you some of these things. So hopefully that'll be an incentive for you to come in and take a look at it. So it'll be fun. This is exactly what I did for 10 hours when I was over in London with Tom Hugard. Tom and I did it together, and we had a great time, doing it together. So I think it's important that you get a chance to go watch it because Can't go there. That's uncharted territory, as they say in the trade, folks. We got another chart here I wanted to show you before the big break comes up here, and that's the importance of this NASDAQ, because if we close below where this puppy is right now, let's get it up here, below these lows that we had right in here, look out, because we did have that nice rally, but if we close below there, this was a 3-day rally that failed, folks, and you don't want to have anything to do with that. That means this thing is getting ready to move to a different stratosphere, and it's on the downside. So be very, very careful with that. 877-927-6648.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Okay, we're back, folks, and I believe we have Jeff from Philly on the line. Jeff, are you there?
Yes. Hi, Larry. How are you?
Good. Thanks for being so patient, my friend. What can I help you with?
Sure. I was going to ask if you would know if there's much of a correlation between monetary news and the grains markets. Like today, the FOMC decision's coming out, and I'm thinking it probably doesn't move the grains market much.
No, you're right. It doesn't. Yeah, it doesn't, Jeff. It really doesn't. So what you have to do is now it will, because of volatility, it might move it a little bit if it's something really, like they raised rates 1.5 points or something really crazy. That'll affect everything, but usually it will not. So I don't believe there's any correlation, and I looked at that stuff for a long time. I haven't recently, because all I basically do now is look at the charts, and I have enough confidence in the charts that gives me a spot that I don't have to worry too much about it.
Okay, great. Thanks. I was asking, of course, to see whether I needed to protect myself, against the news that's coming out. But I'm long on beans. I have a bullish Gartley on a 4-hour chart on the soybeans. So now I don't have to.
All right. Well, just keep your stop in because it gets a little crazy over there for sure.
Oh, yeah. Always got to stop.
Okay.
All right, great. All right, thank you, Larry.
You bet. Thanks for calling in, folks. By the way, I think we're coming. You bet. Tomorrow our guest will be Paula Douglas, and then on Friday we have a special guest that hasn't been on before. Someone very famous, Peter Elides, and he's had the ear of some of the greatest firms in the country. Stevie Cohen, Tudor Jones have all been listening to Peter for a very long time. As have I. Between the two of us, folks, we have 120 years experience, and hopefully he'll be able to show us his picture of his chart of the Dow Jones going back to, I believe, 1952 or something, all done by hand, which is really pretty incredible. So we'll keep a close eye when we listen to Peter on Friday. So live every day in an attitude of gratitude, and may God bless. And we'll see you on the flip side tomorrow, folks. And as I've said many times, try to help your neighbors out. They're still having a lot of difficulty. Maybe you just drive them to the doctor, whatever you have to do. Just do something for somebody else. Pay it back, folks. We've been very lucky for two reasons, living here and being at TFNN. We'll see you on the flip side tomorrow, folks, with Paula Douglas. May God bless.